This secret liquidity pool that I'm about to show you has about a 90% win rate. Now, I don't mean it has a 90% win rate as a model. I mean it has a 90% chance of getting hit during the same day. This is not the same as a model. A model is completely different, but I'm going to show you high probability areas where price will likely attract to. Okay, so let's get started. So the best liquidity pool that will hit 90% of the time are equal highs and equal lows. All right, now let me show you a few examples of this. There's a lot of different liquidity pools, but if you want to be very profitable and you could be patient enough, wait for equal highs and equal lows to form. So here's an example, right? When I'm looking for equal highs and equal lows, all I'm looking for is price to tap the same area to the cent multiple times. So if I saw two candles like this, right, and you can see they're kind of have the same wicks and they're to the cent, that to me is probably going to get hit 90% of the time throughout the whole day. And that's when I'm looking for a model back up to them. Okay, if that makes sense. So what do you do? Well, we know where the level is. We know it's probably going to hit, but that's when you look for a model. And that I will not be explaining in this video. Okay, but here's the thing. Whenever you see this, and I mean to the cent, these are so high probability it's not even funny. Just think about it. This is NQ right now is trading at about $19,000. Okay, it's not actually dollars, but you get what I mean. 19,000 points, 19,000 handles, whatever. The chances of a equal high and equal low perfectly being created is very slim. Okay, do you really think that's random if we get a perfect equal high and equal low? Probably not. Okay, and it's not. Okay, it's not random. I'll tell you that right now. It's all algorithmic. So if you know anything about a double top, this looks like a double top. And it makes retail traders want to short. So that's why I love targeting them. So here's some examples from today. Okay, you can see price went up and we stopped here. Now, I am always looking to the left to see, okay, are we stopping at equal high or equal low? And if we are, then I'm not going to look for a reversal. So we make a high here. If you drag it to the left, you can see it indeed stopped at this high right here, and it stopped to the exact cent. And this is also a swing high. Okay, so it stopped. And what price ends up doing is we end up going back down, and we even get this inversion fair value gap here. And this is where a lot of my students are going to be like, oh, inversion, I'm going to short. But they fail to see that we left equal highs up here, which I know the market is likely going to go towards. Okay, so this is when I was like, okay, I don't like this inversion. I'm going to wait. And that's when price ends up going back to the equal high and wrecking all my students who aren't aware of this. Okay. So it's a very high probability liquidity pool. Okay. These are just equal highs. There's also equal lows I use. And almost every time we will get them. Okay. So you can see price ends up going back up here and it stops right here. Right. And we kind of get a pretty bearish reaction. But we left equal highs up here with another high up here. So would I trust this? Absolutely not. I would not short this. I'd expect the market to go back up at some point, and that's when I look for my model. And you can see, indeed, it does. And let me just show you something. What do you notice about these candles that go above and break this high? Well, they're fairly strong candles. Why might that be? Well, it's because so many people are getting stopped out, and that's just how the market works. It's going to be stopping out everyone who thought, oh, this is going to be a double bottom, right? And the algorithms go above those highs, knowing they're always going to be targeted and knowing they're always going to have stop losses next to them. You can also see, if you look above a little bit, we also have equal highs here. They're formed during the London session. And you can see we end up hitting those too. So if I was looking for a target, I would probably sell my runners or last runners at these and probably not hold anymore. As you all know, I only use inverse fair value gaps. And recently I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free and hopefully should help you. In this example right here, we left 4 equal lows. Okay, so you can see we have 4 equal lows. We made them here and we made them here. Okay, and you can kind of see 1, 2, 3, 4. So we have 4 equal lows. So in this situation, I don't care what the market gives me here. I'm not trusting along. The only time I'd really trust along in this situation like this is probably if we all of a sudden pump through all this. Maybe I take along up here because at that point we're too far away from these. But In this situation right here, I'm not trusting along because I know how high probability these lows are going to be hit and they're going to be a magnet. And you can see price just runs all the way back down to them. And then we end up bouncing later. Okay, so that's another example where there's equal lows below. And I know that I'm probably going to look for a short to these equal lows rather than a long above the equal lows if they're not taken out. So another good example of this is on 7/24, I basically executed a trade on my stream and I said, do not take this trade. There's equal lows below. I wanted to show someone how to execute. And you can see I ended up trolling my Discord saying 0 from 1, losses are part of a game, almost through my account. This is where you should have understood it was sarcasm. And you can see this was the inverse trade I took. Okay, you can see I longed right after this candle close above and I stopped out at the equal lows. But in the stream, I said, okay, this is not a good trade. We have equal lows below and the market's probably going to attract them. Right? I was proving the point of why I don't long with equal lows below. So you can see in this situation here, whether you got your model or not, you can see price was still attracting to these equal lows, which again is going to be very rare for two lows right next to each other to form like this, right? Especially that these are like 5 candles apart. It's not a coincidence. It's not random. They're going to be hit. It means something for later. So you can see I kind of said I was kidding, but it's a great example where you see an inversion, but the market's actually going to 90% of the time probably draw to these equal lows instead. The last question I get about equal highs and equal lows are, would something like this count? And the answer is yes and no. Okay, these are not perfect. Okay, these are relatively equal, but they're not perfectly equal. So I'm not going to marry these, right? There's certain equal highs and equal lows that are absolutely perfect, that there's a lot of touches where I will marry them. These are not it, but it's still a level I will have in the chart. So you can kind of see we kind of form relative equal highs here. This definitely has like a 70% chance of being hit, 9 to 90%, just like the equal highs and equal lows that are perfect do. So while this is still a very good liquidity pool, it's not something I'm going to use 100% of the time and not going to marry it. You can see price ends up hitting it and we do dump after, but just be very careful with looking for relative ones and try to look for the ones that are more perfect to the cent. So that is going to be it for this video. I appreciate you guys watching. Don't forget to use code Dodgy, 90% off sale right now. And yeah, it might be 80%, but it's still a good sale. So use code Dodgy for that if you want to practice. If you really want to try to find trades going to equal highs and equal lows, please use a prop firm. Do not use live capital yet. There's a lot more things you're going to have to learn. Going to equal highs and equal lows is cool when you discover it, but it's not going to make you profitable. Okay, so try to look for these liquidity pools on the chart. I want you to mark out in your journal equal highs and equal lows and see how the market goes to them. The only thing I will say is if we ever get equal highs and equal lows right next to each other, like I'm not even like exaggerating, literally the candle next to each other, right? Don't worry about these unless they go along with the bias. The only ones I'd worry about are the ones that are like 3 or 4 candles apart or more. So something like this, and then you can worry about those and be like, okay, we're probably gonna hit those. So back test it, check the equal highs and equal lows out. There's a lot of indicators on these as well. And yeah, hope you guys make. That's it for this video. I'll see you in the next one. Peace.